rules for no penalty IRA withdrawals. In this episode, we are going to address the question, what are COVID-19 rules for no penalty withdrawals from a retirement account like a 401k or an IRA? So get ready. This could be your opportunity to tap into maybe up to $100,000 and not pay a 10% penalty. So my name's Doug Andrew, and I've been a financial strategist, a tax minimization specialist for more than 46 years. There's a unique opportunity right now because of the anxiety, the hardships that have been created by the COVID-19 pandemic. And so I'm going to share with you some advice that I've been giving people for years, even without a pandemic, that motivates people to tap into those IRAs and 401ks, 403bs. These are qualified accounts, especially before the age of 59 and a half, because there's generally a 10% penalty on top of the tax. So let's talk about why this opportunity is something that maybe you ought to consider. When Congress first passed the stimulus, the different packages and relief during the COVID-19 pandemic, they were concerned because many people experienced hardships from loss of their job or income. They were laid off. Maybe getting hired was put off. They had a new job, but then the employer said, well, we can't afford to bring you on for 2 or 3 months. The original rules were a little bit stringent. And so I released an episode that talked about, many times if you have experienced any kind of a hardship, this is an opportunity, whether you need the money or not, but that's all you need to justify withdrawing money out of a 401k or an IRA during a pandemic. If you have suffered, generally that qualifies you. And so you go to your advisor, to the brokerage firm, wherever those accounts are, and they will make sure you qualify to be able to tap into that money without a 10% penalty. Now, this is a great opportunity to get the taxes over and done with at your current tax rates, which are usually going to be lower than when you retire. See, most people, when they hit retirement, they're in as higher tax bracket as they've ever been in, and they didn't realize that was going to happen. Also, with these rules, you can spread out paying the tax over 3 tax years instead of all at once. So this is a unique opportunity. So let's talk about the rules in general and why this may make sense for you. So in June of 2020, the IRS came out and loosened up the rules a little bit more to allow more Americans to be able to tap into their IRAs and 401ks without the 10% penalty that normally you would incur before the age of 59 and a half. So let's just review these briefly. There's greater flexibility now in doing that. If you have had a difficult time weathering the pandemic, maybe you didn't actually lose your job, but you had a reduction, or your income was disturbed, or maybe you were about to start a new job or a new position and they held off on that. There's a lot more leniency now in what qualifies as a hardship. Now, you can access up to $100,000. Sometimes people say, well, I don't need that much. But if you can access $100,000, here's why I would do it, or at least strongly consider accessing a full $100,000 without a 10% penalty. See, for years I've been telling people, the old premise that you put money into IRAs and 401ks, and you get a tax break on the seed money you put in. It accumulates tax deferred, and then when you retire, you'll likely be in a lower bracket. That is no longer true or just axiomatic. That's because Congress keeps raising taxes, and they have already spent about $6 trillion in economic stimulus due to the COVID-19 pandemic. Where are they going to get this money? I mean, that's more money than the IRS collects in income taxes in an entire year. They bring in $4 trillion bucks, and they've already shelled out an additional $6 trillion. And so what does that mean taxes will likely do in the future? The General Accountability Office, the Congressional Budget Office, says that taxes will be going up. They estimate to at least 50% for retirees, maybe even 60 or 70%, especially if other initiatives that seem to be popular with a lot of American voters, like free college tuition or forgiveness of student loans or Medicare for all is passed. They estimate taxes will go up to 60 or 70%. So I've been telling people for years, you want to consider any opportunity to get the taxes over and done with sooner than later. Now, the first thing a CPA says is, well, then what? Put it back into what? You want to reinvest the net after-tax monies into something that's going to be tax-free from now on. And the first thing they usually say is, well, what's tax-free? And that's when I explain my favorite vehicle that has been grandfathered in the Internal Revenue Code for more than 100 years that allows one to accumulate money totally tax-free and then be able to access the money tax-free during retirement. And when you finally pass away, it increases in value. It blossoms in value instantly and transfers income tax-free. I'm not talking about a Roth. In fact, what I'm talking about, many savvy CPAs and tax attorneys refer to as the rich man's Roth. Now, I affectionately call this account the Laser Fund. Laser is an acronym that stands for Liquid Asset Safely Earning Returns. In fact, my most recent book, book number 11, is titled The Laser Fund: How to Diversify and Create the Foundation for a Tax-Free Retirement. And so for years, I've been advising people to look for opportunities, even before age 59 and a half, like this one, where you can move money out of those IRAs and 401ks and get the taxes over and done with sooner than later, rather than continuing to compound the problem, delay the inevitable, procrastinate paying tax. But the key is you must reposition the net after-tax money into something that's going to be tax-free from now on. The reason I like the Laser Fund is because it will ultimately blossom when you pass away, reimbursing you many-fold what you paid in tax. So when we talk about the no penalty withdrawal, it's deeper than just to come up with some money to help you in a crisis. If all you need was maybe $10,000 or $20,000, but you could access $100,000 without a 10% penalty, hello, I would rather get the taxes over and done with sooner than later. So let's talk about how this all comes together. So many people who have done this, even after age 59 and a half, where there's no 10% penalty, even though they weren't retired yet, I would tell them you want to do a strategic rollout. You don't want to continue to postpone and defer until you're 70 and a half. Used to be the old rule. Now it's age 72. You can wait that long, but then you must begin to withdraw money out of those IRAs and 401ks based upon the government's life expectancy formula. So let's say at age 72, your life expectancy is 20 years. You have to take out at least 1/20th of your IRA or 401k accounts, or you will have to pay a 50% penalty on top of the tax. If you're supposed to withdraw $50,000 and you don't, the penalty is $25,000 on top of the tax. And so, see, the government has used this savings bond, so to speak. Uncle Sam has been your partner on these IRAs and 401ks, and it's payday for them. And so they want their portion. They want that money out and taxed before you die. And if you die and you still have some money left in there, they will tax it as it passes and your spouse uses it. It used to be you could stretch it out to your kids and they could use it in their lifetime. Now your children, if they inherit money in an IRA or 401k, they must get it out and taxed within 10 years after they inherit it. because the government wants that tax revenue. So when you hear CNBC advisors telling you to take RMDs, beware. That's required minimum distributions. That's the worst advice I've ever heard. We developed some software years ago that showed people the darkness of the night, so to speak, if they continued to defer until they were 70 and a half, now age 72, and then took RMDs throughout their life expectancy and their spouses, how much they would pay in tax by adding up all those years, and people were flabbergasted. And then I would show them a strategic rollout. This is not a rollover. A rollover is like going from the frying pan into the fire, taking money out of a 401k and rolling it over into an IRA, continuing to delay the inevitable. No, a strategic rollout, you get the money out, usually over a 5-year period, get the taxes over and done with, then reposition the after-tax monies into something that's going to be tax-free from now on. You wouldn't believe how many times I help people offset the tax that was due by resurrecting new deductions that they had been killing before, maybe on their real estate properties or whatever. That's a whole nother subject. But many times I have helped clients get money out of an IRA or 401k portfolio, and I saved them $250,000 of unnecessary tax. Another couple, I'm thinking of $750,000. A couple, both the husband and wife were physicians. We saved them $1.2 million of unnecessary tax by doing a strategic rollout. So the COVID-19 opportunity here is to be able to, if you've experienced a hardship, and most people have, but you would talk to your advisor about that, the custodian, where you have your money in an IRA or 401k, and if they say, yep, I would consider taking out up to $100,000, getting the taxes over and done with over a 3-year period, which usually saves you taxes rather than hitting all in 1 year, and you avoid that 10% penalty, so you're saving that. Your current tax bracket is likely the lowest bracket you will ever be in, and then reposition that into something that's going to be tax-free from now on. Let me show you what you can read to be able to learn where I would put that after-tax money if I was doing a strategic rollout. As I mentioned, I've written 11 books, and my 11th one, most recent, is called The Laser Fund. And this is my favorite vehicle. It's totally tax-free as it accumulates your money, but when you access your money, it's tax-free. And when you ultimately pass away, it blossoms in value and transfers income tax-free. This is where I've been able to earn returns between 8 to 10% consistently for the last 45 years. You'll learn in here how every $1 million can generate up to $100,000 a year of tax-free cash flow or income for as long as you live. This side of the book is 14 chapters containing charts, graphs, and explanations. You flip the book over if you're more right-brained. This book is about 62 actual client stories in 12 different chapters of how the Laser Fund is used for retirement, college funding, real estate management, capital for companies and businesses. If you would like a free copy, I'll buy the book. You just go to laserfund.com and pay $5.95 shipping and handling, and I'll send the book out to you. You'll see other options where you can get the audio version, digital version, and also a video master classes. So that's what I would recommend so that you can become empowered and know what's better than an IRA or 401k.